It's been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, talking of today. Now, the world has learned a lot about COVID-19, but a chasm remains in our understanding of the virus that's killed nearly 2 million people and whipsawed the global economy. We still don't know how it began or where it came from. Well, Bloomberg's Emma O'Brien takes us to the original epicenter, Wuhan.
So we're in one of Wuhan's most popular going out areas. There's lots of hip restaurants around here, breweries, bars. People are out and about, they're socializing, they're eating. Lots of people wearing masks still.
我觉得我不担心了，我觉得武汉市是最安全的城市现在。会带，因为现在有流感，不光光是疫情，流感也会，而且你进店里面他会要求你戴口罩。如果不戴，他会让你出来的。
我个人觉得他肯定不是武汉来的，因为现在不管是从科学的角度，还是说我们现实感受角度，如果是从武汉来的话，现在在全球疫情就不可能发生的这么严重了呀。
Talking to people here tonight in Wuhan, it's really interesting to hear their stories 1 year on from what triggered the world's first really harsh lockdown and the first really intense virus wave with lots of people dying and a real onslaught of cases on the hospitals here. People still talk about being affected by the lockdown, both mentally and economically.
早期的时候有过这么一些疑虑，对，然后国内的也有啊，有的地方说武汉来的货怕是有病毒啊。我至少觉得现在武汉市民的各方面的防护、防疫，包括自己的这种意识、防范的意识，是得到了长度的提高。
Behind me is one of the 2 temporary hospitals that were built here in Wuhan shortly after the lockdown started. Now this one here took in more than 2,000 coronavirus patients, half of them critical cases, and they were treated here in temporary buildings built in quite famously under 2 weeks by Chinese construction workers. You can't get inside, there's security, these aren't being used anymore. And have been since about April when they were shut down and the pandemic situation here in Wuhan. And nobody that we've spoken to thought it began here in this central Chinese city. It must have come from somewhere else, and there are a variety of theories, which just really shows that, you know, this still really is a mystery as to where and how this virus and pandemic started. But it does definitely feel that 1 year on from when this all started, things are moving back to normal and that people are moving on here. China is also stepping up efforts to distance itself from the virus. After basically shutting the WHO out of Wuhan all year, it's now mounting a campaign to cast doubt over China being the source of the virus. I've just been inside the Wuhan Cultural Exhibition Hall where this temporary exhibition about the pandemic here is taking place, and it's pretty overwhelming. Inside, there's a wealth of exhibitions, dioramas with hospital beds, 3D holograms of doctors working on patients, mannequins of military people bringing medical supplies, big pictures of Xi Jinping and a real emphasis on his role in containing this pandemic. You can tell that they're really trying to pull at heartstrings and really sort of push the narrative that this city and this country survived and defeated this virus.
经过这次疫情之后，我觉得那几个月会很难受，但是过来以后，我觉得我比原来更坚强了。但是就像你们今天去看那个展览一样，我还是不能触碰。触碰以后，我心里我还是觉得会很难过，因为我是从这个时间过来的。
In many ways, China has little incentive to find out how this all started. With the virus all but eliminated from its own shores, the public anger at Beijing's early concealments and missteps eased, and the economy on track to take over the US in 2028.
Bloomberg's Emma O'Brien there reporting from Wuhan for Bloomberg Quick Take. Now, coming up, we'll continue tracking COVID-19 and figuring out exactly what comes next, not only for vaccines, but for possible extra lockdowns. We'll be speaking to Aisha Langford, assistant professor at NYU's School of Medicine. This is Bloomberg.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Now, to talk about COVID-19, we're delighted to be joined by Aisha Langford, assistant professor in NYU's School of Medicine, Department of Population Health. Thank you so much, Professor Langford, for speaking to us today. There's a new variant, and that's negative. We see a lot more lockdowns in Europe and certain parts in the US, but we also have a vaccine. What will the first 6 months of 2021 look like?
Well, I hope it will be very inspiring with the vaccine rollout. I'm very hopeful that what we've learned so far in terms of getting the vaccine to the people much quicker will be hope for us in the next few weeks and the upcoming months. You mentioned the new variant of the COVID strain. It is important for people to remember that so far we don't know if the new variant will make people sicker or if it's more deadly. So it's really important that people continue to wear their masks, wash their hands, and to practice social distancing.
Do we know that it's easier to transmit it through this new variant, Aisha? I live in London and there's many more restrictions because of that. Does it mean that actually social distancing needs to be increased? How does it change the way we should live until more people get the vaccine?
Yes, so we do know that it appears to be more contagious. Again, we don't know if that's going to make people sicker or if it's more deadly. So I think we have to continue practicing all of the behaviors that we've been practicing, like wearing our mask and practicing social distancing. It will really be up to policymakers to determine how they're going to respond with regard to lockdowns, but many of the behaviors that we have in place so far should remain in place. And hopefully with the new vaccines and rapid uptake, that will help slow the devastating effects that this pandemic has had on us.
Aisha, when you look at some of, I guess, the unknown quantities for 2021, how much are we protected after the first dose of any vaccine?
It really depends on which vaccine you're talking about. The first shot, for example, of the Pfizer vaccine, it's estimated that the protection is about 50%, but it's really important for people to get that second dose. And that's where you're starting to see protection of up to 95%. So depending on which vaccine people are getting, it's really important to follow through with all of the shots and to make sure that they're coming back.
Thank you so much for joining us, Professor Aisha Langford, their assistant professor at NYU's School of Medicine. In the meantime, I'm looking at stocks, and they're actually still going up. We're close to record highs. More Bloomberg surveillance ahead, simulcast this time on radio and TV. Happy New Year's Eve, everyone. This is Bloomberg.
新型にはなんと2万点以上全身でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Substantial further progress means what it says. We'll be looking for inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
There's going to be surprises along the way that will largely not be pleasant.
We could see the first quarter dip back into negative territory.
I'm expecting a fairly tumultuous year coming.
The first part of the year is going to be very tough, but I think you're looking at a much better second half.
Absolutely. I think inflation is coming back in 21.
You could have an economic recovery and not necessarily a stock market recovery.
When we look back a decade from now and focus on what happened during 2020, I think we'll be all amazed at the rapidity of the response.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City and Berlin for our audience worldwide, a very good morning, everyone. This is Bloomberg Surveillance, live on Bloomberg Television and Bloomberg Radio. I'm Carol Masser alongside Matt Miller, Jonathan Farrow, and Lisa Abramowitz and Tom Keene. They are all returning in the new year, but getting a nice little break this last week of 2020. And Matt, I don't know, what are you focusing on? Maybe perhaps Brexit finally done?
No. Brexit, I'm happily putting Brexit way in my rearview mirror, although we will talk to my old friend Edward Evans in just a moment. He is in charge of our Brexit coverage. Parliament passed it less than 24 hours to go before the deadline, but who would have expected anything other than that? You know, the real focus for me today has, I have to say, been on Bitcoin, because we've crossed through another big round number, $29,000 for Bitcoin. And the question is, what does this mean? I was looking at a Fed chart earlier, and I'm sure you saw, Carol, how much money the Fed has added to its own balance sheet. I think boosted by 75% in 2020. And that's not, the Fed is not alone in that. Central banks around the world have been adding liquidity like that. And that's one of the reasons that you see this incredible rise in Bitcoin.
Well, listen, it's one of the stories. We saw it after the financial crisis, Matt, and we saw it again here in 2020, that there was just so much money pumped into the system because we needed it to be that way by global central banks. But you're right, it's caused so many different investors to, seek out yield, and it's been going into all different kinds of assets like Bitcoin. I think it's up something like, is it 50% in December? So it's biggest monthly gain since May of 2019. So you see kind of big moves like that. At the same time, some people liken Bitcoin to kind of maybe the new gold. Gold also on track for a banner year, and we haven't seen that in some time as well. So it's been this kind of interesting year of juxtapositions of old and new investments. We've had, a pretty busy IPO year. So it's kind of interesting to see kind of some of the difference. Having said that, should we look at the markets?
Although an entirely different magnitude, right? I mean, I bought my first Bitcoin for $600, and we're looking at $29,000 now. Had I been a smarter person, I would be sitting on a Caribbean beach somewhere, sipping a cocktail. I would have kept buying them when they went down to $235 in, I think, 2013. But I instead continued to work here. In any case, the other big focus, Carol, I think has been obviously the virus and the vaccine, the sloth with which that vaccine doth roll out, especially in the U.S., has really hit markets to some extent. For example, the FTSE now down 1%, one of the few equity indexes open for trade here in Europe. Euronext indexes are open, Deutsche Börse indexes are closed. But it hasn't helped to hear continued bad news, and especially about the lockdown as well in England being broadened and tightened.
Well, having said that, I think what's going to be really important, let's not forget that we still do get some economic news today, and we're going to get weekly jobless, which has been such a key metric for all of us. I feel like a gut check every week in terms of the U.S. labor market, but it's also, more timely information when it comes to the labor market, and it can be, I know we have a guest later on, Lara Rame, who says it's the canary in the coal mine for her. So it's an important indicator when we watch, especially, Matt, as you said, those lockdowns have increased, certainly here in the United States and around the world.
All right, now let's, speaking of around the world, let's go over to our Brexit editor, Edward Evans, standing by in London. And Edward, one of the big concerns has been, the vaccine isn't going to make these things better right away. England was, or the UK was one of the first countries to really roll out the vaccine with force. And yet, Boris Johnson last night said he's going to tighten and broaden England's lockdown.
Yes, you can see a resurgence in the coronavirus here that is threatening to overwhelm the country's National Health Service. And Johnson himself was warning very clearly of an extremely difficult few months ahead. The problem is, of course, they're trying to roll out the vaccine, but it's not at the rate that the virus is spreading in the UK right now.
So, Ed, I do wonder, too, though, in some ways, with the UK Parliament, getting through just in the nick of time before the end of 2020, getting that Brexit deal through, getting that big macro issue off of the shoulders of UK Prime Minister Boris Johnson, in some ways, does it then kind of allow him to ultimately focus on COVID-19 right now and really focusing on what his economy needs right now?
He's certainly been focused on COVID while he's been doing Brexit at the same time. And I think I suggest caution in suggesting that Brexit is parked as an issue from tonight. I think the deal averted an acrimonious breakup with the bloc. It removed the threat of tariffs and quotas. It's been hanging over businesses since the referendum 4 years ago. But still, a lot of this relationship is unresolved. Businesses have still got to figure out how the new rules will affect them. Things like rules of origin mean that they may not get tariff-free access to the bloc. Services firms are left out of the agreement, particularly financial services firms are still waiting to see what kind of access they'll have to the EU. And we're still waiting to discover what the EU will do about data transfers. This is a big issue for all businesses. Obviously, the EU takes a very strong line on data protection and wants to ensure that customers' data are protected when they're moved to the UK. But more broadly and politically, the future relationship with Europe has not been set in stone here. If the UK wants to diverge from EU rules, it can, but at the cost of tariffs being imposed from the other side. And that means the political debate will go on. This is a deal that can be reviewed or terminated at later date. So while Brexit as an issue may have gone away, the question of what the relationship with Britain's nearest and biggest commercial partner will be certainly hasn't.
Right. The story that keeps on giving.
Yeah,
that's
it'll be interesting to see, for example, tonight what happens, and tomorrow what happens at Dover and Calais, how many trucks are lined up. France fired a warning shot, in a sense, across the bow of goods trade before this deal was wrapped up. But for me, Edward, the most fascinating thing will be to see how the city of London develops this year. And as much as my friends on the New York Stock Exchange hate to hear me say it, London is the global capital of finance. What do you expect for the city?
The key thing here is that the city loses its automatic passport to offer its services from London across the EU. And to do that, it's going to have to rely, in future, it's going to have to rely on getting what's called an equivalence ruling from the European Commission. Now, that is something the EU can grant entirely unilaterally and withdraw with a very short period of notice. And that was not part of the trade deal, and we are still waiting to hear whether the EU will grant that equivalence. So that's the big question mark hanging over the city. In practice, what's been happening is firms have not been waiting for that decision. They've been transferring people and assets and beefing up their operations in places like Frankfurt, Amsterdam, and Dublin in anticipation of Brexit at the end of this year. So in practice, we'll have to see what kind of effect it has in practice.
Well, as you said, it will continue certainly into the new year. Bloomberg's Brexit editor, Edward Evans, joining us with the latest on Brexit. All right, that is certainly one of the big macro issues that we've had to deal with in 2020, actually for several years, but at least getting closer here to resolution. Let's see what Steve DeSanctis has to say about that and some of the other issues weighing on investors' mind. He's Jefferies equity strategist joining us on this New Year's Eve. Steve, first of all, Happy New Year. Nice to have you here. Matt,
Happy New Year.
Happy New Year. Will it be a Happy New Year, or will we have to be patient before it's kind of a Happy New Year?
Well, I think we've gotten... We've had a pretty good fourth quarter, so I think the celebration has started early. I think there's, I do think that you're going to have a little bit of a sloppier tape in the first half of the year as we're kind of digesting some pretty record gains here in November and December, especially as you move down market cap. The Russell 2000 small cap in the U.S. is having its best quarter ever, up over 31%. So I think you've pulled forward a lot of good news, and so we're going to need to see how things kind of unfold in the first half of the year.
Where do you see valuations really stretched, Steve? I mean, I'm looking at Apple's only 40, which feels in this market pretty conservative. Amazon's only 96, which for Bezos isn't so bad either. But there are places, Tesla's over 1,000. Where do you see valuations the most stretched?
Honestly, I still think large cap growth, small cap growth. Small cap growth is trading closer to 40 times earnings. Small cap growth is up almost 35% year to date, driven a lot by technology, healthcare. If you kind of break it down into what's driven the market in 2020, it's been everybody wants to hop on these high sales growth companies. High sales growth companies are trading closer to 10 times sales. The rest of the universe is trading closer to 3 times. So the valuation gap has gotten wider and wider. And I think as we move through 2021, I'm more optimistic that that gap is going to narrow. Right. And we'll start to see cyclicals start to do a lot better versus the secular growth story.
But Steve, do you, in terms of some of those big global tech names in particular that have really led the momentum trade for a long time, anytime investors dare to step back, they kind of get smacked down because those stocks continue to trade higher. Do you dare step away significantly from some of the FANG names?
We've actually started to see a little bit of the weighting to those names start to come down in our data, whether it's long-only folks, whether it's hedge funds. And no, you're going to still have a very large portion of your portfolio, but, a little bit of money coming out of those names are really going to help broaden out the market. I think the big issue is that there really wasn't an alternative to these names. Those names, what we call the Sweet 16 at Jefferies, the Sweet 16 stocks, have been growing their revenue double digits. Now, all of a sudden, as we move into 2021, there's going to be an alternative. There's going to be other areas, whether that's going to be the industrials, whether that's going to be materials. If we start to see rates tick up and the shape of the yield curve start to steepen, right, the financials and the banks are going to start to work a lot better. So just a little bit coming out of those names really broadens out the U.S. equity market.
We shall see if we see that broadening out. All right, Steve, thank you so much. As I said, have a great
Appreciate
new year.
Time. Happy New Year.
Same to you. Steve DeSanctis, Jefferies equity strategist, joining us on the phone there. But, Matt, I think there's a lot of questions. Again, I hate to say the wall of worry, but I just think until we get more clarity on earnings and economic growth, that will really determine the trajectory of trading. Scott.
Yeah, well, I hate to say FOMO, but that seems like it's what's determining the trajectory of trading to me. Everybody this year, again, for the first time, I think, really since the dot-com bubble, all of my high school friends started texting me questions about how do I get syndicate? How can I buy shares in Airbnb? How can I get in on this IPO? And I haven't had that much Main Street interest in my job in terms of, new issues, really since the year 2000. It's a little depressing that I've been in the business that long, but I think that says something about where we are and where valuations are sitting.
All right, well, coming up later in the hour, Francesco Blanche. He is B of A, head of global commodities and derivatives research. He has some interesting thoughts on Bitcoin, on gold, and also oil. That's all to come. Carol Massar, Matt Miller, and this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. Mitch McConnell has made it clear the direct payments in the stimulus package will not be increased to $2,000. The Senate Majority Leader says a House bill that would do that has no realistic path to quick passage in the Senate. The larger payments are backed by Democrats and President Trump, but McConnell says the House legislation falls short of what the president wants. U.S. health officials admit that the coronavirus immunization program is off to a slow start. That raises the prospect that the all-in bet on vaccines could be hurt by the same affliction that hobbled other measures to contain the pandemic. Only about 2.7 million Americans had been vaccinated by last night, New York time. That's just a fraction of the 20 million the government hoped to have received. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Ritika Gupta. This is Bloomberg.
we have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands of television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The Senate is not going to split apart the three issues that President Trump linked together just because Democrats are afraid to address two of them. The Senate's not going to be bullied into rushing out more borrowed money into the hands of Democrat rich friends who don't need the help.
All right, nice to know that there is some consistency that we've seen throughout 2020, and that is the division that we continue to see in Congress. Of course, that was Mitch McConnell, Senate Majority Leader. And I do think, Matt, that is one thing that unfortunately continues to pervade Washington.
Yeah, there still is that that divide. I don't think that's going away anytime soon. That is one of the most depressing things about 2021. You know, the end of this year doesn't mean the end of the completely polar political situation, not just in the United States of America, but around the world. It's just most pronounced in the U.S. Let's get over to Kevin Cirilli, Bloomberg chief Washington correspondent. And Kevin, we heard Mitch McConnell there saying he's definitely going to tie these $2,000 checks, the likelihood of them, which we know is anyway infinitesimal, to alleged election fraud and stripping protections away from big social media companies. Do you think that we're going to see anything on that this week?
No, there's really no chance that a piece of legislation, as we've been reporting earlier this week and talking about on this program, that a piece of legislation would get to move through and pass the Senate with those three items attached to it. And Leader McConnell knows this. But this is precisely the strategery, for lack of a better word, that Leader McConnell is a master of. President Trump tweeted out that he wanted this issue explored. He did so at a time in which the negotiations were finalized, and Leader McConnell presented to the president as well as to the upper chamber a piece of legislation precisely how the current occupant of the White House asked for it. And as a result of that, it's going nowhere, because no matter across the ideological spectrum, there is a poison pill for Republicans and Democrats, and one person's political crusade is another person's poison pill, politically speaking. And as a result of that, no chance of getting through with a bill lumped with all three of those items.
So I'm looking forward. I'm going to be an optimist here, Kevin, and I am thinking about the Biden administration. Joe Biden is somebody who maybe is probably going to be an equal adversary, if you will, or perhaps friend when it comes to Mitch McConnell. What about their past relationship will help them in this future relationship together? It's going to be different because it's a president now with the head of the Senate, if the Senate continues to hold power there.
I'm an optimist too. My dad always taught me growing up to remain optimistic and focus on the future, right, and what lies ahead. So here's what I would say. Senate Majority Leader Mitch McConnell's childhood, in which he overcame polio, he was actually treated at the same hospital where former President Franklin Delano Roosevelt also received treatment for his polio as well, and what he suffered through when he was president. I bring that up because President-elect Joe Biden, in the closing weeks of his political campaign, campaigned in Georgia during the and gave a speech rather in his campaign in this particular town. And as a result of that, many people interpreted that as the sort of biological, autobiographical element to their decades-long political, personal relationship and an understanding. While Leader McConnell overcame disease at a young age, President-elect Biden has been incredibly open about his own journey with grief. I mention that because these are two individuals and American politicians who have crafted a personal relationship that predates, candidly, many of the freshman and junior level relationships that currently occupy the clickbait culture in the halls of Congress.
Yeah, I think it harkens back to a Tip O'Neill reaching across the aisle, a Senator Edward Kennedy reaching across the aisle, because that there were relationships, bipartisan relationships in Washington. Having said that, I have had tons of conversations with individuals who said, you know what, I'm not going to get anything out of this second round of pandemic relief. So what's the likelihood that something else comes down from the Biden administration, the incoming Biden administration, and a new Congress in terms of more relief for those hit and impacted by the virus?
Well, very quickly, three top-line points that I would hit here is that there's been a lot of comparisons to post-2008 crash versus what we're seeing right now in terms of the recovery. But the biggest difference in terms of the political landscape in the House of Representatives is that unlike post-2008, when the Freedom Caucus and the Tea Party really ascended into power, there wasn't a counter-political caucus with clout. This time, there's the bipartisan Problem Solvers Caucus. They're a group of centrists in both parties that really served as the foundation for the current stimulus that we're seeing now. Secondly, in terms of rural, more conservative types of politicians representing agricultural districts, they have a financial services incentive to work with members who represent urban communities in the cities. Why? On issues pertaining to access to small loans. That's something that unites them from a business perspective. And then finally, quite frankly, the dividing government that we've all alluded to, regardless of the outcome in Georgia, that dividing government typically will force people to get to some type of consensus in a way that could play out for the United States to develop a nonpartisan agenda in which certain items of that agenda, I'm thinking of 5G, will be American principle and not a political piñata.
I got a wild card here for you, Kevin.
Yes.
One of the most exciting, whether you think it was good or not, one of the most exciting moments of the 2016 election cycle was when WikiLeaks started dumping loads of DNC emails. President Trump at the time praised WikiLeaks. Julian Assange may be extradited to the U.S. very soon. Will the president, before or after he comes here, will the president, before he leaves office, pardon Julian Assange?
That would, based upon my reporting, there are forces within the Republican Party who would come out incredibly strong against that. There are other people in the party who would welcome that. It would no doubt be an incredibly controversial pick if that were to happen. We'll be reporting on it every which way.
All right, and I know Riley's going to be mad at me because we're supposed to wrap, but I got to ask you a question, Kevin. Senator Josh Hawley saying yesterday he's going to object during Congress's counting of the Electoral College vote on January 6th. Does this have any staying power? Is this something significant? Explain it just quickly.
It's significant from the lens of 2024. Senator Hawley clearly making the foundation of his and the start of his 2024 pitch to Republican voters. What happens on January 6th poses no real risk of the results of the 2020 election from being overturned, but it is incredibly impactful for the dynamics at the starting line of the 2024 cycle. I'm ready to go back out on the campaign trail. I still want to be a campaign trail reporter.
Of course There's you something do. wrong with me. It's in your
Happy
blood.
New Year, you guys.
It's all
I
that,
know.
It's all that food on the campaign trail.
Yes.
You are the best.
Happy New
you
Year
are
to you.
rock
Happy
solid.
New Year. Thank you.
Kevin
Sorry, thank
Cirilli
you.
is amazing in Washington. And Riley, thank you for letting me go a little bit rogue there. All right, coming up, everybody, Lakshman Achuthan. He is going to check in, talk to us about his economic outlook, what he sees coming in 2021. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It is Bloomberg Surveillance. Carol Massar along with Matt Miller on this New Year's Eve, just getting ready to wrap up 2020. Having said that, let's take a quick check at the market trade. It's pretty quiet, but we do have global market indices, certainly on the equity side, hovering near records for the year. S&P 500 futures, no surprise. There's a few of us working, but it's pretty mellow. 37.23 on S&P 500 futures. Euro at $1.22. Bitcoin, though, Matt mentioned it at the top of our broadcast, took out $29,000 earlier. You can see just pulling back a little bit at this hour. If we flip it on over to our second board, take a look at some of the rest of the trade this morning. You can see over in Europe again, quiet trade, a little bit lower. FTSE 100, though, which rallied earlier this week, down about 1.3%. So we're seeing some movement to the downside. CAC 40 also, Matt, just a little bit lower, but we can anticipate it's going to be kind of a mellow day as we get ready to wrap up what's been a very volatile year.
It has been a very volatile year, and that's probably not going to stop. I want to go right now to talk a little bit more about what to expect to Lakshman Akuthan. He's the co-founder of the Economic Cycle Research Institute, probably the most respected private institution that tracks business cycles in the world. And Lakshman, first of all, Happy New Year. Thanks for joining us. Great to see you. You have really a unique position to tell us what to expect in terms of the economy next year. At the beginning of this year, there were Nobel laureate economists forecasting a cascade of bankruptcies. We didn't really see that happen. Are we going to see it in the beginning of 2021?
I think the short answer is no. I mean, a lot of people get tripped up by the cycle. The cycle's super powerful underneath all of these huge, stressful headlines that we're digesting every day. So 9 months ago, 2021 is really getting set up by 2020. So I just want to do a quick thing on 2020. 2020, 9 months back, in the depths of the craziness, we were able to make a call that the recession would be really short, in part because it was so extreme and the way it kicked off. And building on that view, another thing happened. Right? We had an upturn in global industrial growth. We don't really think about it, but we're connected to this huge global industrial cycle. That happened, that started in May of 2020. And then in the summer, there was an inflation cycle upturn that started from really low levels because recessions kill inflation. So it started from really low levels, but the cycle changed direction. That happened this summer. So that's played out really well. And the markets have adjusted. Boy, oh boy, right? They're completely on board for this so-called reflation trade. And they're banking on it continuing straight through 2021. And right there, is the foreshadowing. We got to be careful. I mean, we all knew winter was coming, but boy, oh, you've got all the bears in hibernation right now. It's really exciting to see some prices up.
What does that mean, Lakshman? I mean, your indicators showed that we were going to see a pickup in business activity and inflation at the end of this year. We have seen that trade. You're obviously, look at the indexes. You were right. But what about 2021? What's your data showing you?
Well, look, there's nothing that's going to stop happening as the year started. I mean, this cycle is still completely to the upside. You could look at very short leading indicators like our industrial price index. Last week, this is a composite of sensitive industrial materials prices. Last week, it hit over a 10-year high. And when you look inside of it to see what is animal spirits and what's real, you could look at the non-exchange traded components of sensitive industrial materials prices, and they have hit an all-time record high in their growth rates. So the bottom line is that the goods sector in particular of our economy, the U.S. And partly around the world, is on fire. It's red hot. And that's great, and it's going to continue. We can still make hay on that, but we also know, I think we should know, that trees don't grow to the sky. And so the question in 2021 is, when is it going to turn around? And there are some storm clouds on the horizon.
Well, there's a great story by our economics team, Lakshman, that's on the Bloomberg terminal, and it just talks about the big COVID changes in the world economy are only just beginning. And it's things like lots of easy money floating around. It's about working from home. It's about the great divides in our society, the K-shaped recovery. What does that mean longer term? It's also about, the rise of automation. We've seen that kind of take off, what technology can kind of do and kind of replace workers once again. This whole idea of, more embracing of climate change and technologies and companies that play in those areas, those can have a lasting impact. What of those, this is the story, by the way, everyone, go to Bloomberg.com for more, but what of those trends, Lakshman, that will really impact the economic cycle that we're going to see not only next year, but also for years to come?
Well, I think those are some longer term issues beyond 2021, and what will really be telling, and we don't know the answer to this yet, is what happens as we start to re-engage.
Do you think everybody comes rushing back? Do you think as we re-engage? No, seriously.
Yeah, look, I'm going to try. We all are going to try, and I think we want to. As human beings, as human beings, we are people facing for the most part. Some of us are more reclusive, but generally, we're going to want to re-engage. So there will come a time when you're done working on the old car and setting up the things at home. Right now, everybody's doing everything at home. Do it yourself. That's why the good stuff is on fire. It's part of the reason. You spoke to the K-shaped recovery. If you're working in a people-facing kind of lower-paying job, you're in dire straits, quite frankly. That's where things like the stimulus come into play. For others who can kind of weather that for a year even or something, work from home, cobble something together, the stimulus is a little less important. That's about half of consumers who do the bulk of spending, and right now they're spending it all on goods and houses and stuff. And that's not over. Okay, as unfair as it sounds, it's still happening.
Right. Well, Matt, I'm thinking if your mom was here, that this is an issue she'd want to push. But I just think about that half of people, even though you say the half that probably haven't been touched by the pandemic, when, Lakshman, do we get more concerned about the half that have been really hurt? I have conversation over conversation with individuals who are like, we're kind of at wit's end, where our unemployment benefits, we're not going to get anything anymore. We're really having a tough time. When do we start to be concerned about that in terms of our society and our economy? Even if they're a smaller part of our economy, they're still important.
Well, that goes a little bit beyond what a cycle indicator can tell you. I mean, I can tell you this, that earned income, not a stimulus, earned income began recovering all the way back in April, May. And it continues to recover. Now, the stimulus is a big fire hose. Some of it goes where it's not really needed, and some of it goes where it is needed. And, again, if we get another stimulus, the same kind of lack of precision will probably happen, but you still want to do it because people are in dire straits in certain circumstances. Now, that's actually, I don't think that's going to ultimately change. The cycle's not going to change that.
Right.
What can happen is the pain can recede as the cycle continues to improve, but the cycle can be really Darwinian at times. Inflation is in an upturn now, okay? So it doesn't matter who you are, the prices are going up, and that means Treasury yields are going up, and when Treasury yields
exactly where I wanted to go.
Yeah, when Treasury yields rise, even people with money start to have unintended consequences.
So what do you expect then in terms of treasuries? Yesterday, Carol and I were talking, I think Steen Jacobson said it first, but then a lot of our guests agreed that 10 years going to 150 or 2 by the year end. It didn't seem that controversial. Do you think we're going to see the 10-year yield rise to those levels as well?
Well, that's totally in the cards given the inflation cycle upturn, which is not over, right? So break-evens took a break, right? The forward-looking kind of inflation expectations, they went flat all fall. But the future inflation gauge, the leading indicator that we produce for the inflation cycle, has just been steadily going up. And there's no peak in sight in that indicator at all. That might not sound like a big deal, right? We're coming off of really low readings on inflation. But it is if you are on a tight budget for the K-shaped economy conversation. And when you look at equity valuations, a lot of those current valuations to some degree are predicated on sub 1% interest rates. And so when interest rates rise even a quarter of a point, that's a big deal for valuations. So that can weigh on equity valuations in that part of the market back and forth in 2021. And separately, remember we said trees don't go to the sky, if we see the cycle start to turn down, not a recession, just a slowdown, you have a 1-2 punch now of higher yields weighing on prices, some slowing in growth weighing on earnings growth. That's a tougher combination. It's very different in 2021 at some point than what we saw in 2020. I think that's where the bears might wake up a little bit.
Yeah, you might have a repricing there. A lot of folks thinking that we might get that a little bit later in the year. Lakshman, so good to check in with you. Have a great new year. The best to you and your family. Lakshman Ajuthan over at the Economic Cycle Research Institute in New York, joining us there. Of course, the founder of that institute. Listen, Matt, K-shaped recovery, I've talked about it with Peter Atwater over at William & Mary, who really first coined it. I mean, I think it's just brilliant in terms of describing so much that's going on, and I think we'll continue to see that play out in 2021. But I think it's something that, you know, policymakers have to address. We need to think about it in terms of the recovery and how we can do better.
Yeah, absolutely. And I think, well, Jerome Powell is on board for that. You got Janet Yellen coming in to the Fed. She will no doubt be on board for that. And maybe Joe Biden and Kamala Harris will be focused on it as well. So the question is, how much can you do in a socially distanced economy when there aren't those, as Lakshman was just saying, when there aren't those people-to-people service jobs available?
Coming up, we're going to talk with Francisco, Blanche, Bank of America head of Global Commodities and Derivatives Research. That is coming up on Bloomberg Surveillance. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Senate Majority Leader Mitch McConnell has ruled out passing the House bill that would give most Americans $2,000 payments. McConnell says the measure has no realistic path to quick passage in the Senate. Instead, the Senate will work on combining the payments with legislation on election integrity and rolling back social media liability protections. And the Senate is closing in on a vote to override President Trump's veto of the $740 billion defense bill. It's a battle with the White House that may not end until the final hours before a new Congress begins on Sunday. The House has already voted to override the veto, and senators are expected to follow suit. The UK is optimistic about getting a trade deal done with the US under the Biden administration. We spoke with the British ambassador to the US.
We believe this deal can be done. It can be done in 2021. Another reason to do the deal would in fact be that COVID recovery. We want to send an early signal in 2021 of our confidence in economic recovery across the globe, and particularly in the UK and the US.
The ambassador said that digital commerce would be a big part of any trade deal with the US. Kim Jong-un is keeping the world guessing. North Korea hasn't said whether Kim will return to tradition and personally give a New Year's Day speech. Last year, he issued a report instead. North Korean leaders have typically used the first day of the year to announce plans. In any case, Kim's next big speech will be watched for any signals of how he may approach the Biden administration. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Rishika Gupta. This is Bloomberg.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Regulation is the big risk for Bitcoin. I think probably with zero interest rates and record high valuations in other asset classes, you can see why there is attraction to Bitcoin, but it could be a house of cards that regulators could bring down.
And that was Patrick Armstrong, Plurimi Wealth Chief Investment Officer, talking about what we've been talking about a lot all this week, and that is Bitcoin as it continues to take out one level after another, just hitting 29,000, excuse me, in yesterday's trade. Having said that, Bitcoin a little bit lower, just down about 0.5% in today's trade. Let's take a quick check on the markets. It is expected to be quiet. We've already seen a quiet trade, certainly in the European markets. Futures column flat, 122 on that euro. And as for the 10-year with a yield of 0.92, so we backed off some of the levels we saw earlier this week. Bitcoin, as we said, just down, Matt, about 0.4%, coming in at 28,000, just about 28,800 there.
All right, what a fascinating story it's been. I mean, everyone knows by now, but this code was just created 10 years ago in 2009, so 10 years and change. I mean, when I covered it in 2012, it was 1,000. That was the reason that we did a 2-week report on it. It then dropped to 235. So the run-up has been insane. And one of the interesting debates has been, is this a currency or a commodity? It's important for tax implications. It's important for legal implications. But we have a commodity specialist here to talk a little bit about that, and of course other things as well. Bitcoin isn't the only asset out there, but it certainly is one of the most appreciated of the year and of December. Francisco Blanch, B of A, head of global commodities and derivatives research, joins us. What's your take on this? I know you've been writing about Bitcoin here and there for years now, Francisco. Has it now been widely accepted in the institutional investment community?
Well, look, I think cryptocurrencies in general and Bitcoin in particular are, to your earlier question, I think they're clearly tokens, and tokens are commodities. So I wouldn't necessarily qualify them as currencies. Currencies are issued by a government. Bitcoin or any cryptocurrency can be issued by almost anyone, right? So in that sense, it's a bit of an unusual setup. So I would qualify that. I think it's more of a commodity than it is a currency, a crypto token. The second thing I'd say is that if you think about this particular construct that Bitcoin has. Remember that 90% plus of the coin is held by less than 1% of the account holders. So there's a very high concentration of the early adopters that haven't really sold. And again, if you think about supply and demand, it's just one of those things that there's been a flurry of demand and frankly not very much supply because first of all the supply is capped longer term,
right? And
that's been the issue. So it's extremely volatile. Compare it to any other commodity, the volatility of cryptocurrencies is way higher. In most cases.
So, Francisco, I want to ask you, what do you make, though, of a year where you've got Bitcoin up more than 300% here in 2020, and you've got gold on track to have the biggest annual advance in a decade? How do you kind of juxtapose those two? And how do you kind of make sense of that?
Right. So, to me, it's quite straightforward. We've had, of course, a flurry of liquidity that's coming to the market from the central banks. The Fed's balance sheet's more than doubled as well throughout the period. So naturally, when you inject so much money, remember, we were talking about currency before, right? So currency is created by governments, and when the world's most important central bank in the world's largest economy inject so much liquidity in the financial system, all assets tend to benefit from it. And that's what we've seen. Now, if you think about airline stocks or you think about other assets that have been severely impacted by mobility, which is really what the COVID-19 crisis is about, they've not gone back to previous historical records. But other asset classes that were in some way constrained, they've surged. And of course, that's included commodities like gold or silver. It's also, like I said before, it's impacted. Think about electric vehicle stocks, right? I mean, those have also taken off in a huge way. So I think liquidity has been driving this enormous divergence in asset values that we've seen, because central banks, with the Fed at the helm, were trying to support the economy and particularly the financial markets.
So what happened then to oil? I mean, we were looking at $60, Francisco, at the beginning of the year. It dropped to -40, and now we're trading at 47.89. I can take the negative drop as a blip, a giant, possibly orchestrated fat finger, but nonetheless, it's a commodity priced in dollars that has dropped 20% in value. Why?
Well, so the oil story, as I mentioned earlier, right, is very linked to the idea that COVID-19 is a unique kind of recession. Normally, recessions are cyclical in the sense that we see industry slowing down meaningfully, and we tend to see some kind of financial event driving them. This time around, COVID-19 just literally shut us, shut the global economy down in a meaningful way, and mobility collapsed. Suddenly, we couldn't go anywhere. In fact, today I'm at home rather than being at the studio with you guys, as I would normally do on a regular day. I haven't been on a plane now, I guess, for the longest period of my life. I mean, it's probably 9, 10 months now without kind of hopping on a plane. That mobility is what's taken down the demand for oil by as much as 30% in the month of April. And when demand fell by 30%, which also probably linked, think of GDP also fell by about that number, oil prices collapsed. And then to your point, there was a bit of a fat finger there, but also at some point, OPEC started to cut back production. We reopened the global economy starting in May and June, and things picked up. But now in the last couple of days, we've gotten a little nervous again because of this new virus strain going on in the UK, right? So anyway, go ahead.
Hey, Francisco, just got about 15, 20 seconds. So what's your projection? Give us a quick price target for oil in 2021.
So we see oil getting to $60 a barrel by the second quarter. So we are constructive. We think the economy comes back. Obviously, we have to control this UK strain in the next couple of months, so it could be a little patchy in January. But I think once we get to June, we're going to be in a much better shape. Those vaccines are going to really help get things moving. No pun intended.
All right. Going to leave it on that note. Francisco, thank you so much. Have a great and safe new year. Francisco Blanch, he is Bank of America Head of Global Commodities and Derivatives Research, joining us here. And, Matt, this is really important. We'll see whether demand, we know supplies in the oil market have been pretty vast, but we'll have to see whether or not demand ultimately picks up.
I've been driving as much as possible, I have to say.
But
I haven't been flying anywhere.
That doesn't surprise me.
So
all right.
Maybe it'll pick up from my side. Coming up, Marvin Lowe, State Street Global Macro Strategist, joins us. This is Bloomberg.
manage your debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%. So you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Surprises along the way that will largely not be pleasant.
We could see the first quarter dip back into negative territory.
I'm expecting a fairly tumultuous year coming.
The first part of the year is going to be very tough, but I think you're looking at a much better second half.
Absolutely. I think inflation is coming back in 21.
You could have an economic recovery and not necessarily a stock market recovery.
When we look back a decade from now and focus on what happened during 2020, I think we'll be all amazed at the rapidity of the response.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning. This is Bloomberg Surveillance on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller in Berlin with Carol Massar in New York. Tom, John, and Lisa are out this week. For those of you on radio who aren't seeing this beautiful display of vibrant colors, we're watching the fireworks go off in Sydney. It is, of course, midnight there, and so not only is it 2021 in Sydney, it's no longer John Farrow's birthday there. Today, Carol, yes, everywhere else in the world still is John Farrow's birthday.
Probably just like he likes it. He's just going to move around the world, right? And go from celebration to celebration. They'll have fireworks for him wherever they go. How great is that?
That's right. Now that I think about it, he's grown up with it. He's grown up with fireworks to celebrate his birthday.
It's like pretty cool.
Spoiled bald man. In any case, we wish him well.
We do.
Good friend of mine, of course. I didn't wear my blue. I'll change into my blue suit when it's time for the Open in a tribute to Farrow again today. But Happy New Year to everybody in Sydney and to audiences around the world, Carol. It's great to be with you today.
So great to be with you. A great way to kind of bring in the new year, at least over in Sydney. But we'll kind of continue to see that, of course, around the world. I mean, listen, Matt, as you remind us, we don't turn the page and things change overnight, but there is something about seeing that just kind of gives me some hope in terms of 2021, and that we kind of deal with some of the problems that have been hanging over us. Having said that, it's kind of crazy when you look at the market trade. I mean, it's quiet. It's going to be quiet today. It's been quieting down throughout the week, Matt, as we know. But we're seeing markets ending this tumultuous year on a quiet note, but you've got global stock indexes holding near record highs. The dollar's at the lowest in 2 years. So I really think we have to think big picture as we get ready to wrap up 2020, because it's been a volatile year, but a year where nobody would have anticipated the gains that we've seen in some asset classes, including, of course, stocks, as a result of all the struggles that we've had to deal with. It's been pretty
absolutely. I mean, you mentioned my mother, right? She's a professor at Denison University. In March, when the markets were crashing, she was like in tears on the phone with me, selling my youngest brother, moving into my spare room, right? Completely no idea how she's going to afford retirement. And now she's out shopping for houses again. So that's how I think 2020 has gone. One of the great rallies that we've watched this year, we talked about Bitcoin already, but even the lowly base metals. I mean, if you look at a chart of copper, it comes down into March, understandably, because the economy you'd think is going to tank with everything shutting down, especially with the virus starting in China, one of the biggest users of Dr. Copper, as it's called. And now it's just taken off from 4,500 to 8,000. Francisco Blanch, B of A head of global commodities and derivatives research, is still with us. And Francisco, let me get your take on what we've seen in copper. It's been, throughout my career, a predictor of economic growth. Do you still see it that way?
Absolutely. I mean, I think one of the interesting things about copper is that, to the earlier point, we've seen this huge amount of stimulus coming into the economy, supporting the market. But remember one thing, the trade shock that we saw this year, the drop in the purchase of goods was kind of half the scale of what we saw back in 2008, 2009, with twice the stimulus, right? So the fiscal and monetary stimulus. So one of the unique things about this crisis is that even though mobility has come to a standstill and the services sector has stumbled, mainly hospitality, and we talked about airlines before, if you think about copper's really benefited from a continued, to your earlier point, continued shopping demand. People have continued to buy things, and they've continued to buy things in the US and all around the world. So that's kept factories humming. So almost as soon as we saw the lockdowns end in the month of May, or start to end, we saw all the demand for copper come back pretty quick. And now we're looking at the next few years, and people are realizing that copper in particular is key to our decarbonization efforts, which obviously under a Biden presidency starting in 20 days, is going to take the demand for the red metal to a new level. Remember, copper is key for decarbonization of the mobility sector. So as we move from internal combustion to electric vehicles, copper demand is going to pick up. We're going to see copper demand to electrify to decarbonize the electricity sector. And then we're also going to see strong demand for copper to decarbonize the industrial sector. So copper kind of goes through the eye of the entire decarbonization process. So there's a lot of things going for copper right now, and I think they'll continue to go. We are constructive the metal. We see it as one of the winners of 2021 and 2022 here.
Listen, Francisco, I want to push into that a little bit further, because I think that's going to be one of the significant trends of 2021, this whole idea of decarbonization, of the green movement. Tesla now in the S&P 500, Enphase, which is a company that makes solar power work, they are going to be put into the S&P 500. There is something going on much more significantly. We know we've been moving towards a greener world, but there is something that feels like that happened in 2021 as a result of the world being shut down. We could see mountains, we could see cleaner skies, that I think the world is looking at the green world of investing and just a greener environment overall differently. So how does that continue to play out? You talk about copper. Does that become even a more significant investment trend come 2021?
Yes, I think so. I think decarbonization is bullish metals, and particularly is bullish copper, number one, but also other metals like nickel, which are used in battery technology, also lithium, cobalt, silver, platinum, when you think about hydrogen, and even steel, to be honest. I mean, you need a lot of steel to decarbonize, ironically. So I think these trends are very entrenched, and certainly infrastructure spending over the next few years, which I think governments will come down to, will also be at the heart of the spending when it comes to metals. And then one last thing to mention is that this year, I mean, you pointed out before, but governments have gotten a lot bigger, right? I mean, this is a year where we had to fill the gap left by the private sector with government spending. And that's kind of what's created also this huge transformational capacity. Governments are just simply a lot bigger, and they got to keep spending money and keep people employed. So yes, I think there's something going on there.
And a lot of people have talked about, if we're going to spend a lot from this government, from government programs to stimulate the economy, why not do it in a green way and solve kind of two big problems at once? Francisco, it's been a rough year, so I can wish you again Happy New Year. We can do it twice. Francisco Blanch, he's Bank of America Head of Global Commodities and Derivatives Research. All right, we want to talk a little bit more about the market environment. Marvin Lowe is with us, State Street Senior Global Market Strategist, joining us here on the phone. So, Marvin, good to have you here. Good morning. You write in some of your research that a consensus risk is emerging as the biggest market risk. What specifically are you concerned about?
Well, and you know, the challenge is that it's hard to argue with the ultimately return to mobility that we all expect within a few quarters. But the trades that have worked this year continue to be, in a lot of ways, the trades that everyone is excited about going into next year. And it's just really one-sided. So, we know we're in for a challenging winter, and we're willing to look through it because of the vaccine and because of the return to mobility. But it's still going to be, a rocky period. And the market's ability to, if you will, look past some of those concerns is ultimately a bit of a concern. Having said that, it's hard to argue with the power that the vaccine's going to let us all return to normal the way we want to.
How quickly do you expect that to happen, Marvin?
You know what? I actually, while there have been hiccups in terms of the rollout of the vaccine, particularly in the U.S. relative to how quickly they've occurred, I do think that we're going to start to see increased mobility with lower death rates, which allow people to be more comfortable in re-engaging by the second quarter. So, certainly by the summer, we're going to be talking about how the world's going to look like in a post-pandemic manner.
Biggest risk next year, Marvin?
You know what? I actually think that inflation, which is not present now, could be a bigger problem earlier than a lot of people expect, just because of the stimulus, just because of kind of, if you will, the pent-up demand, and a lot of the inflation that has been kind of building with some of the pandemic type products still remain relatively high, even though the overall readings are low.
All right, going to leave it on that note. Hey, Marvin, thank you so much. Happy New Year. Marvin Lowe, State Street Senior Global Market Strategist, joining us. And Matt, there is a headline crossing the Bloomberg. Looks like Senator Lindsey Graham speaking on Fox News and urging Senator Mitch McConnell to set a vote on a standalone $2,000 check. So it's kind of interesting that just when we think this issue has kind of gone away, we talked with Kevin Cirilli earlier, it feels like, once again, someone on the Republican side saying, wait a minute, maybe we can do this in a different way.
Right. We know that Senator Graham just played golf with Donald Trump very recently. Surely they talked about this. And Mitch McConnell has been trying to wrap up these $2,000 checks with a couple of issues that he knows will kill it right away. A political poison pill, as Kevin said. Donald Trump, of course, tweeted out that not passing these $2,000 checks is a death wish. That's a direct quote for the GOP. They need to do it ASAP. Now, Lindsey Graham, very close to the president, is trying to urging Mitch McConnell in an interview on Fox to pass, to put it out there and pass those increases to stimulus for everyday Americans. Coming up, Adam Siegel, Council on Foreign Relations, Director of Digital and Cyberspace Policy Program, is going to talk to us, and you can be sure we'll discuss Bitcoin. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Mitch McConnell has made it clear that direct payments in the stimulus package will not be increased to $2,000. The Senate Majority Leader says a House bill that would do that has no realistic path to quick passage in the Senate. The larger payments are backed by Democrats and President Trump, but McConnell says the House legislation falls short of what the president wants. The British Parliament approved Prime Minister Boris Johnson's post-Brexit trade deal with less than 24 hours to spare. Britain formally leaves the European Union single market tonight. The rush to get the deal through Parliament in a single day ends the 4-year saga that gripped British politics and divided the country. U.S. health officials admit that the coronavirus immunization program is off to a slow start. That raises the prospect that the all-in bet on vaccines could be hurt by the same affliction that hobbled other measures to contain the pandemic. Only about 2.7 million Americans had been vaccinated by last night. New York Times, that's just a fraction of the 20 million the government hoped to have received shots by the end of 2020. And in Hong Kong, the highest court has sent media mogul tycoon Jimmy Lai back to jail. He is awaiting trial for allegedly violating China's new national security law. The ruling reversed a lower court's decision to let Lai go free on bail, and it avoids a showdown with Beijing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have to wait for the details, but the indicators that we got from the European Commission point that we definitely have a door open where we all of a sudden can do stuff that we were not able to do in the past.
That was Jörg Wuttke. He's the EU Chamber of Commerce in China boss. He's the head of that EU Chamber of Commerce in China. And it's really interesting, Carol, that he and that the EU are so excited about this deal on a day when the Chinese have ordered Jimmy Lai back to jail. You know, there are protesters, pro-democracy protesters in Hong Kong that are facing very long jail sentences, and then Jimmy Lai being brought back in to prison, stamping Beijing's kind of ironclad hold over that former city-state, at the same time as the EU is trying its best to deepen its business relations with China. So I think those two things just juxtaposed are pretty fascinating.
I was thinking the same thing when we were doing all the stories this morning on Jimmy Lai. Like, I was thinking about Jack Ma, you know, and Alibaba. Like, it is not great to be a successful business person right now when it comes to, or it feels that way in China. Having said that, I feel like I want to get to...
Unless you're a billionaire. It's probably great to be... I think Jack Ma probably has a pretty good time.
I think he's moving his money, like, out of Hong Kong and China. Like, I just wonder.
I mean, he has so much money that you don't need to shed a tear for him if something bad happens to him.
But right? I do wonder about, you know, China's this just interesting... we keep talking about juxtapositions of embracing capitalism, and yet until you're too successful or until the government says, wait a minute, you know, I want to kind of rein you in. Having said that, I kind of want to get to our guest because I feel like, Matt, we could talk to him for 60 minutes. Adam Siegel is with us, patiently waiting as we just kind of chit-chat here. He's director of the Digital and Cyberspace Policy Program at the Council on Foreign Relations. He's also author of The Hacked World Order, How Nations Fight, Trade, Maneuver, and Manipulate in a Digital Age. Adam, how do you make sense of China right now? It does feel like they are definitely talking tough with everything and everyone around the world, really clamping down on a lot of issues. What's going on and what does it mean for relations with the rest of the world and with the U.S. specifically?
I think that's right. I think Xi Jinping has been very clear that China is going to exert itself on the world stage, that he has this vision of a China dream. And that dream seems to entail both China throwing its weight around on the international stage and the party controlling more of Chinese society and the Chinese economy.
So what do you think about Jack Ma's moves? And you know, he was, and Alibaba and Ant Group executives were maybe a bit flippant towards regulators. Now, this morning there was a Reuters report that Chinese regulators are going to probe Ant Group's equity holdings, and they've already spoiled the IPO. Do big business titans there have to really turn it around and get an attitude change before they can continue to operate as they previously had?
So I think the regulators are definitely sending a message to Jack Ma. The stories that we heard, that the speech that Jack Ma gave, denigrating the regulators, really upset and angered Xi Jinping. And so we are certainly seeing a slapdown of Jack Ma. And messaging from the party and Xi that he expects the private sector to really follow along and help China achieve its goals. That said, I would say there's some pretty welcoming evidence from this weekend that the regulations are not going to be kind of a larger political campaign against the private sector. There was an interview with a deputy general from the People's Bank that really talks about anti-monopoly regulations in a very technical way and doesn't kind of make political claims about the sector. There was a statement in the China Daily that talks about, the government still wants to support the platform economy. So I think if you're careful and you do what the party wants you to do, you can continue to make those billions.
So Adam, does the world still want to be a part of one of the largest or the largest markets in the world? Because I think when I started my career here in terms of business news, it was all about everybody, whether you're a European multinational, a U.S. multinational, you wanted to have a footprint in China specifically, and you would do anything to be there. And I do wonder, has that changed, especially as China has made it very clear that they want to develop their domestic economy. And they don't want to be the workforce of the world. They want to be operating on a higher plane in high tech and so on, and in the financial industry. So I do wonder, has that changed? Does the outside still want to be in, or are they starting to pull back? Or is China kind of starting to pull back and letting them in?
I think the outside world and the business community in particular has kind of lost its rose-colored glasses about China. I think they still believe they have to be there. I don't think they think there's a choice. I think that the domestic market is still so attractive, but I think they realize that yes, the Chinese are going to compete on their own. They're going to insist that much of the domestic economy goes to Chinese firms, not to foreign firms. And as you mentioned in your intro about Hong Kong, there's values and goals of the Chinese government that are going to offend our U.S. values, Western values, and are going to make it very difficult for companies to be involved without having to compromise on those political values.
What do you think about Andreas Kluth for Bloomberg Opinion wrote an interesting piece yesterday saying the EU makes this deal with China at just the wrong time for the Biden administration. I mean, now the Biden administration has to come in and try and re-befriend the European Union. At the same time, he's got to take a hard line with China.
Yeah, it's not great timing. I agree with that. I mean, the discussions have been long standing, and so that they've finally reached the conclusion. But I think that's right. I think the Biden administration is coming in with a lot of expectation that they can kind of make up with the EU fairly easily, given the Trump administration's denigration of alliances and working with the Europeans, and to work broadly with Europe on pushing back against China, especially in areas like technology competition. So to see the EU make this agreement now is not great timing for the Biden administration.
All right, Adam,
thanks so much for joining us. Really, we both appreciate your time, and I'm sure we both wish you a Happy New Year as well. Adam Siegel there from the Council on Foreign Relations talking to us about China. Carol?
Sorry about that. I didn't mean to step on your words.
Well, we have a producer, Riley, and she says, Miller, thanks, and then...
She says Miller, thanks, and Carol, thanks.
Carol takes us out here.
Listen, I think China, this is going to be something that we have to watch, because they have really focused on security issues for the first time on all different levels of their society, Matt. So it was great to catch up with Adam, and I'm going to take us out, because Riley says take us out, so I'm going to do it. Coming up, we're going to talk about the economy. Lara Rame, she is going to join us, FS Investments Chief U.S. Economist. Don't forget, in just about 4.5 minutes' time, we've got that weekly jobless claims number. Let me say it again, weekly jobless claims. It's a key economic data point to watch, certainly among the pandemic. All right, you're listening and watching Bloomberg Surveillance. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
You are listening and watching to Bloomberg Surveillance. Carol Massar along with Matt Miller. I'm in New York. Matt's in Berlin. And we're going to get another economic data point in just about a couple seconds' time. And we're talking about the weekly jobless claims number. This has been a key, really, economic data point in terms of giving us a check on where we are. And they are out. 787,000 weekly jobless for the week ending December 26th. That's coming in better than forecast. Economists we surveyed at Bloomberg were looking for a number of 835,000. And it is below the previous week, which was before 803,000. If I look at continuing claims, that's also an important benchmark to look at here. 5.2 million. That too is better than the forecast of 5.37 million. So again, U.S. initial jobless claims falling to 787,000 last week. And if I take a look at futures, Matt, I mean, listen, the market's pretty quiet here, but look at that number. For me, when you get that bigger perspective, you go back a few months, you see how bad it was. And the concern here is that as we continue to shut down parts of the economy, whether we go back to those numbers we saw last spring, and that's why we watch these weekly jobless claims so much, to see whether or not we're going to see that kind of build that we saw, Matt, last spring.
Well, I mean, it's still an unbelievable number. In 1 week, 785,000 Americans file for jobless benefits. And let's keep in mind, this is a week where extended jobless benefits are going to lapse because the president waited just a couple hours too long to sign that bill. And more than 5 million people need those continuing claims. Those are also people who would love to have $2,000 stimulus checks, but Mitch McConnell right now is holding that up. And I think it bears repeating that Lindsey Graham has urged, well, first of all, the president himself said holding that up is a death wish for Republicans. And now Lindsey Graham has come out on Fox urging Mitch McConnell to put that up for a standalone vote, those $2,000 checks. So we could still see that change. It'll be great to get Kevin Cirilli's take on that. But this is just, 5.2 million people need to figure out a way to put food on the table and pay the rent. And it doesn't seem like the time to really play political games with them.
All right, but many would ask, where was the president and other Republicans over the summer as we were working, this package through, or where were we just a couple of weeks ago when these numbers were being finalized? The Democrats certainly would have said, hey, listen, we're all in when it comes to $2,000. So it is pretty upsetting to see that we're kind of seeing this debate continue when we could have probably, in terms of policymakers, figured it out just a few weeks ago. I want to throw out a number, though. Back in the spring, layoffs, those weekly jobless, we were up to 6.9 million as the economy shut down. So, Matt, we got to put this to our next guest, whether or not she's worried that we're going to start to see an uptick when it comes to even more jobless claims from week to week.
Yeah, Lara Raim, let's bring her in right now. FS Investments chief U.S. economist. And let me start, Lara, with the devil's advocate, with the other side of this. At what point does the U.S. spend too much money? At what point does the U.S. take on too much debt? Because there isn't really a magic money tree, right? I mean, at some point, you just can't keep handing out checks to American citizens.
Well, I think if we've seen anything, it's that if we wait too long and we wait until the economy is really experiencing a really cataclysmic disruption that we then, when we're performing legislation under triage, we can at that point do too much or be, I think, less targeted. The real point is that if you can enact legislation earlier, you can afford to be more thoughtful and you can be more targeted with it. And that just diminishes the weight, it diminishes the need for these multi-trillion-dollar huge packages. I think the point that Carol made is really important, which is that, right now we're seeing these delays that really risk, I think, making the need so much more inflamed. At that point, you're trying to just fill a bigger gap. It gets more expensive. So doing less earlier really gets you further.
Well, and the thing is, Lara, this is all about, this is going to show in the economy in terms of the economic growth figures, which are always lagging, or a lot of them are. But I mean, there's another story on the Bloomberg. Millions of Americans are calling in sick, stunting the recovery. The whole idea is, there are a lot of lost days, and that plays into productivity, and that plays into economic growth, that it's even stunting that. So layer that on top, you got to be a little bit worried about growth going forward.
I think that's right, Carol. And here this is kind of getting deep in the weeds on the employment numbers, but you look at initial claims, and to your point, they've come down, but boy, relative to any other recession, they are so elevated, even now, months into this recession. And you add to the fact that so many people have left the labor force. We're going to get the big monthly payroll numbers next Friday. But one of the things that we don't usually pay attention to is that participation rate. All that is expressing is how many people are actually out there looking for jobs. We've seen the unemployment rate come down to less than 7%, but buried beneath that is the fact that an awful lot of people, and probably because schools aren't open, you can think of a lot of reasons why, or people have taken their elders out of nursing homes. You can think of a lot of reasons why during this pandemic, people have decided to stop looking for work. So that lower participation rate, little things like that, you cut a 10 million here, 10 million people there from the labor force. And when you think about what gives us growth, what gives us GDP, those numbers just may not be quite as strong as a lot of people are expecting, into the end of 2021, or as we get that traction back online after the vaccine.
So, Lara, do you think companies are going to hold off in terms of hiring, even if they expect demand to start coming back? I just wonder, how hesitant do you think companies are going to be until they really see significant demand in 2021?
This is going to be a critical thing that we're watching in those monthly payroll numbers, because what we've seen is a really big decline in temporary unemployment, but we've started to see permanent employment rising. So I think something fascinating about COVID is that it's really accelerated so many trends that we saw prior to the pandemic. They've just really accelerated rapidly. And one of them has been this difference between temporary and permanent employment. And so in a normal recession, this is not a normal recession, but in a normal recession, permanent unemployment really continues to rise throughout the recession, and it keeps rising afterwards because companies may bring back permanent or temporary, they may be more likely to kind of hire people temporarily, temp workers filling the gaps, but they're less likely to bring on that permanent employment. So in that regard, what we're seeing now is actually playing out more in a more normal cycle, and that's troubling. We really need to see companies bringing back those permanent jobs that offer household job security. That's, at the end of the day, over long cycles without stimulus checks, that's what really burnishes the household confidence, the consumer confidence that drives our economy.
The thing most troubling to me has been people close to retirement or planning to retire now. They're not getting any kind of return. And you mentioned in your note one of my favorite books from childhood, The Giving Tree. It's so depressing when it's completely cut down. And you compare this to the fixed income market for 2021. What do you see happening with the 10-year, for example, next year?
Yeah. So many people are looking ahead with really optimistic growth outlooks for 2021. And I think, a lot of the forecasts around 4% are very, very reasonable. particularly in the second half of the year, if we really get the distribution of the vaccine effective. But here's the real problem, right? Long-term interest rates are still, I think, going to be trapped at really very near these historic lows. Because on the other side of it, you're going to have continued quantitative easing from the Fed. You're going to have continued, I think, uncertainty about the direction of inflation. A lot of people calling for this big reflation play next year, right, I think are really getting out over their skis. The reality is...
Well, although you had that to some extent now, and this is really, Lara, what the Fed is trying to do, and the ECB and everyone else. This is financial repression, right? Because they're pushing even retirees out the risk spectrum. So to get back to my mom, you know, she can't be holding fixed income right now at 68. I can't remember exactly how old she is, but, you know, she's got to be in equities. And this is, you write about the liquid courage. The Fed is enticing these people to go out there. And at least in 2020, it's been, thankfully, a good move.
Oh, absolutely. And I think, you know, the point of the idea of the giving tree, right? This tree that was fixed income that gave us growth and income and diversification, you know, throughout the decades, back when interest rates were 7% and 5% and even 4% in the 2000s. You know, it's 2010, we really saw that fall flat. At the height of growth that we had in 2017, 18, rates were 2.5%. You know, now you're less than 1% on the 10-year. The Barclays Ag is, you know, 1.25%. At the end of the day, you need more. So I think, you know, this is an asset class with trillions of dollars still in it or related to it. So investors, I think this theme of trying to get more active around income is just going to continue, trying to push further out the income spectrum, right, lower duration, all those things are going to keep going in 2021.
Lara Raim, we will be talking with you, no doubt, in 2021. Have a happy new year. Stay safe. Lara Raim, she is FS Investments Chief U.S. Economist. Really great to check in with her. You know, I was thinking of Bloomberg Business Week in early March. They did a cover called The Lost Year, Matt, and I thought it was just so telling. And it was just as the virus was, you know, coming out, and there were just lots of question marks about how bad it will get, what will the economy do. And I do wonder if, you know, a cover that will be appropriate maybe in 2021 is that reflation trade that Lakshman was very all in on, and we've had other guests who were all in, and then Lara kind of saying, well, wait a minute, you know, we've got to really see how this plays out ultimately. So I think there's still a lot of questions to figure out on that one.
Look, you mentioned the K-shaped recovery, right? Yeah. And I think this is the point. If you are in the service industry, waiting tables, tending bar, you know, training people at the gym, you're not making any money, and chances are you didn't cash in on the equity reflation trade. On the other hand, if you're holding the S&P, it's been a great year. You're up 15% just by holding the basket. So, yeah, it's split for sure.
All right, coming up, Deborah Fuller of the University of Washington School of Medicine Microbiology. She's a professor there. We're going to get the latest, an update on COVID-19, the vaccine, the virus, all you need to know on this Thursday. I'm Carol Master along with Matt Miller, and this is Bloomberg.
With the First Word News, I'm Rishika Gupta. Senate Majority Leader Mitch McConnell has ruled out passing the House bill that would give most Americans $2,000 payments. McConnell says the measure has no realistic path to quick passage in the Senate. Instead, the Senate will work on combining the payments with legislation on election integrity and rolling back social media liability protections. The Senate is closing in on a vote to override President Trump's veto of the $740 billion defense bill. It's a battle with the White House that may not end until the final hours before a new Congress begins on Sunday. The House has already voted to override the veto, and senators are expected to follow suit. The UK is optimistic about getting a trade deal done with the US under the Biden administration. We spoke with the British ambassador to the US.
We believe this deal can be done. It can be done in 2021. Another reason to do the deal would in fact be that COVID recovery. We want to send an early signal in 2021 of our confidence in economic recovery across the globe, and particularly in the UK and the US.
The ambassador said that digital commerce would be a big part of any trade deal with the US. And no sign of an end to Bitcoin's red-hot December rally. It set another record today. The largest cryptocurrency surged past 29,000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. Have a happy new year. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Of this and the unknowns of this and the cold chain storage issues around this vaccine, particularly the Pfizer one right now, are larger and more challenging than anything we've ever dealt with before. So we have to make sure that every step of the way there's communication.
That was Lauren Sauer, Johns Hopkins University Assistant Professor of Emergency Medicine, talking to us about what has to be the biggest issue of the year. Of course, it will be known as the year 2020, the year of the pandemic, probably even more than the year of central bank liquidity. Coming up on The Open, we will talk about probably more the latter with Peter Cheer from Academy Securities. He's the head of macro strategy there, and he's going to tell us what he thinks you should do as an investor investor to confront this wave of liquidity with which we've been hit? Will it keep coming, I guess, is a question we have for him, especially on the fiscal side. Peter Cheer joins me in just 10 minutes time. Carol?
All right, looking forward to that, Matt. I do want to get into the virus and the latest headlines that we've seen, because we continue to see lockdowns around the world. We continue to see those numbers rising. We continue to, see progress when it comes to a COVID-19 vaccine, more vaccines coming out, but there's still a lot of questions out there. Let's see what Dr. Deborah Fuller, a University of Washington School of Medicine, microbiology professor, this is her world. See what she has to say. Dr. Fuller, nice to have you here with Matt and myself. When you look at the headlines that are out there on a daily basis, it's kind of hard to keep up. It's hard not to be overwhelmed by what's going on when it comes to COVID. What is top of mind for you on this Thursday morning, on this New Year's Eve?
Well, the top of my mind is, as quickly as the news is changing, so does the virus. As we know, this new viral variant that came out increases transmission in the population. That's at the top of my mind, because that really does impact things like how quickly we can get to herd immunity, and of course raises the concern about increasing the number of the cases worldwide and the burden in our hospitals.
How quickly can we get to herd immunity, Dr. Fuller? Can you give us maybe best case scenario, worst case scenario?
Well, as I mentioned, that keeps changing. Herd immunity depends on two different variables. That is the level of vaccine efficacy, which is quite high for some of these vaccines, and that's a good thing. But it also changes, it depends on the transmission rate of the virus, which, because of these mutations, can undergo changes. So we've heard anything ranging from 60 to 80% of the population will need to get vaccinated, and how quickly that happens will depend on how quickly we can roll out these vaccines and get them distributed, in addition to getting new ones licensed, like we're seeing this AstraZeneca just recently just got their vaccine licensed in the UK.
One of the other things that really worries me, as someone who's had Lyme disease like 4 times, what are the long-term effects, or what do we know now about the long-term effects of this disease?
Well, there's two different things there in terms of long-term effects of the disease. That's something we're going to have to be studying for quite some time. But in terms of long-term effects of the vaccine, that's a lot of new data starting to roll out that we're seeing as we study the vaccine further, that immunity seems to be lasting potentially up to 6 months after immunization. That's as far as we've gotten so far. Hopefully it will last at least a year or more, so that when you get vaccinated, you can at least anticipate being immune to this virus for ideally a year or more.
Right, because we need that, because it's going to take, as we know, Dr. Fuller, a long time for everyone to get vaccine. And right now, we heard from President-elect Joe Biden, he's worried that it could take years at the current pace that we are. So we need that. Having said that, I want to go back to the variant, because that's the one thing that just kind of unnerves me every morning. Could we get to a variant that doesn't respond to the current rounds of vaccines?
Well, if a virus can, it will. That's something I learned a long time ago when I was studying virology. It is quite possible it could attain mutations to be resistant to our vaccines, but we don't anticipate that will be easy for the virus to do, because the vaccines were designed with this in mind, with the fact that viruses do undergo mutations. And so it will be very difficult for this virus to get the number and the right types of mutations to be able to evade vaccine immunity. With that said, it's possible. And one of the good things about the types of vaccines we're developing here, the RNA vaccines and now these adenovirus-based vaccines, are very quick to update if needed, if a new variant comes out that is resistant to our vaccine-induced immunity.
So I have to say, there's a story, we were talking about it in the break before we got going, you, me, and Matt. It's by our Bloomberg News team, China making it harder to solve the mystery of where COVID began. How important is it that we understand where this COVID-19 virus specifically came from, to make sure that we truly understand it and can kind of plan for others to come? Because others will come, right?
Absolutely. This is something about viruses. They do transmit. One of the most common ways that pandemics will start is a transmission from an animal reservoir, from a particular animal into humans, and understanding how that happens. That's something that scientists will continue to study. We're still picking at that and probing at it because it's so important to learn about that, to be able to hopefully predict the next one and stop it before it gets to this point.
Dr. Fuller, one of the conversations I'm having with everyone in my world is, listen, I'm just exhausted by this year. I know I have to be good because we can kind of see the finish line. Having said that, it's still going to be probably a couple of rough months in terms of our economy still being shut down. What do we need to remember as we move forward? More people get the vaccine. Those basic things like social distancing, masking, that's going to be with us for a while.
That is going to be with us for a while, but hopefully with these vaccines coming out, we're going to start to progressively see it impact, hopefully in reducing the number of hospitalizations. We might see that earlier on, even as it takes time to distribute these vaccines and get that into enough people. And during that time, we all have to work together. This is now in the hands of the people, of the population, each and every one of us. We need to do our part in getting vaccinated and keeping to the practices, the social distancing and the masking, to get this under control.
Yeah, if I think about COVID and this year, I think one word that comes to mind over and over again is all about community. It's not, you've really got to think about those around you, your community, in terms of getting to a post-COVID world. Dr. Fuller, thank you so much. Have a good New Year. Dr. Deborah Fuller, University of Washington School of Medicine, microbiology professor. What a great voice to talk to and wrap up this hour. So let's wrap up the hour because it's pretty quiet. It's going to be probably a quiet trading day. We've seen trading to some extent still ahead of last year's levels, but thinning out. You can see S&P 500 futures barely changed there, 37.22. We're seeing a little bit of selling in crude, and you can see that 10-year note with a yield of 0.93. Well, coming up later on Bloomberg Television and Bloomberg Radio, Alicia Levine, BNY Mellon Investment Management Chief Strategist. We'll see what she has to say about the upcoming market environment. Have a safe, happy, healthy New Year, everyone, and looking forward to spending 2021 with you. For Matt Miller and the Bloomberg Surveillance team, take care. I'm Carol Masser, and this is Bloomberg.
Substantial further progress means what it says. We'll be looking for inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
For our viewers worldwide, good morning, good morning. I'm Matt Miller in for my good friend John Farrow. The countdown to the open starts right now, and we begin with the big issue, saying goodbye to a tumultuous 2020.
This coronavirus scare. The coronavirus is completely dominating the conversation. I don't entirely feel that we're on stable ground.
We don't know what's going on.
It's a very, very dark outlook.
Record low treasury yields. The VIX went from below 14 to above 80 in 20 trading days.
Investors are naturally quite panicked at the moment with the sell-off.
And then the support of the Fed.
The big lesson is liquidity.
2020 was all about fiscal policy, monetary policy, all about policy.
If we look at all the things we got wrong,
liquidity matters a great deal.
The spreads have actually contracted fairly significantly.
Credit spreads are back to where we were pre-COVID. Liquidity is pumped into the market and that floats all boats.
If you have someone with a printing press in the basement willing to use it, pay attention.
All right, that's a look at some of the smartest voices we've heard from here on Bloomberg Television about what's happened in 2020, what's going to happen in 2021. One thing that's happening today is it's John Farrow's birthday. It just dawned on me that every year, Farrow's birthday is celebrated with fireworks at the end of the day. What a lucky guy. I hope he's really enjoying himself. We wish him the best, John. Come back even stronger and just a little bit older. Let's take a look at what's going on in the markets right now. Bloomberg's Abigail Doolittle standing by, and there are some equity indexes open. Here in Europe, I guess we're half open, half closed, but it doesn't look that great.
Pretty quiet day, at least here in the U.S., Matt, and that's pretty typical to the last trading day of the year, and happy birthday to John. Indeed, if he happens to be watching, then probably no fireworks this year, but nonetheless, hopefully a nice celebration. On the year, though, what a celebration for stocks, and what a surprise, because that's what all those experts were just talking about, the uncertainty back in March when you had that VIX go from 15 to above 80. You had a brief bear market, a brief horrible, sharp recession. And now, who knew? The S&P 500 up more than 15% on the year. The Russell 2000, that great catch-up trade, up more than 18%. The real winner, though, the NASDAQ 100, big tech, those safe stay-at-home stocks, Apple's, Microsoft's, Google's of the year, world up 47%. What makes that so amazing, Matt, is last year, the NASDAQ 100 was up 38%. So over the last 2 years, you have the NASDAQ 100 up 85% through a pandemic. So one of those experts was talking about policy, both fiscal and monetary. That's what it's all about, because not just stocks rallied this year, everything rallied, from gold to corporate bonds to oil, stocks, treasuries too. There wasn't one asset class really, Bitcoin's not even on there, that didn't rally in a huge way off of the March lows. The NASDAQ 100 in this pack doing the best off the March lows, up 83%. The Russell 2000, a double off of the March lows. A piece of it, Matt, of course, the weak dollar. The dollar is down on the year. That Bloomberg Dollar Index down about 3% on the year, helping risk assets. It's going to be interesting to see whether or not there's some sort of recovery in the dollar. There's some technical signs that could be the case. If that happens, maybe a little bit of risk asset volatility, at least in the beginning of 2021, Matt.
Abigail, even with the dollar down, oil still took a 20% hit in 2020, and maybe that's good. Maybe we need fewer people driving and flying around, but do you think, or do analysts think, that it's coming back in 21?
That's an interesting point on oil, because that tells you, that really points to the exact economic impact of the pandemic. So you have a lot of these financial markets that have levitated higher on central bank support. Oil has certainly done that, but still down on the year. Speaking to the economic impact of the pandemic, that'll be the big question for 2021. I think that there's a lot of optimism that the vaccine is going to get things going back in the right direction, a reopening direction, but we still don't know that that's the case. So it'll be interesting to watch oil and see whether or not that can happen, but certainly a big recovery as the year has gone on. And yes, central bank is support is a piece of it, but I think a lot of that is also the reopening hopes, that trade, that reflation trade.
Abigail Doolittle, I look forward to your final note of the year. Thanks very much for joining us. We have the perfect person standing by to talk to us about the economy and the economic recovery in 2021 that we expect. Academy's Peter Cheer warning the economy could outperform markets next year, especially if we see an uptick in inflation, challenging the low yield forever positioning of various parties. Peter joins us right now to talk about that. And why don't we kick it off with oil, Peter? Because I think it's very interesting, especially as a gearhead. You know, I love my big naturally aspirated engines, but that's not at all cool these days. You have to have a couple turbos or even go electric to save the environment. What's oil going to look like next year?
I think it's going to remain a struggle. I think the death of oil has been overstated, though. I think we'll continue to use it. I think we'll see natural gas play a role. The U.S. has already kind of moved towards energy independence. I think the ultimate goal is to have a very green energy type environment, but it's going to take a period of time to get there. And what we have to do is be a little bit careful that we don't handcuff ourselves too much in this effort to go purely green, while trying to compete with China and the rest of the globe in terms of economic activity and manufacturing.
All right, so that's your take on oil, but the bigger statement, I think, is one, the economy outperforming markets. What do you mean by that, especially with markets at these valuations?
I think especially this year, right? You hear a lot of talk, people complaining that the economy hasn't kept up with where the markets are. And to some extent, that's been true really since the financial crisis, where there's this perception that financial assets have done better than the underlying economy. I think as DC tries to address what people are calling this K-shaped recovery, we could see a nice little economic boon that might not translate into as positive as the stock market as people would like. I think stocks can do well, but depending on what happens with corporate taxes, capital gains taxes, etc., the stock market and financial assets may lag. And that's really true if we start getting a good whiff of inflation and this zero rates forever mantra starts getting questioned.
And actually, over the last couple of days, investors and analysts I've spoken to have said they see inflation rearing its, well, now not so ugly head. I think people have been pushing for it. And they see 10-year yields at 150 to 200 by the end of the year. Do you agree?
Yeah, I'm looking for a push towards 125 to 150 in the next month or so. I think 2% is at the very high end it could get. I do think the Federal Reserve will work very closely with the Treasury Department to make that, rise in yields very gradual. So long as we have a gradual rise in yields, it's not horrible for risk assets. We do not want to see a lot of volatility. We don't want to see yields gapping higher. So I think the Treasury and Fed will work closely together. So even if we get inflation, it'll be a very measured pace of higher yields. So I would be shocked, I think, if we get above 2% by year end. I think more 125 to 175 is a useful range for this year.
Treasury and Fed won't be working at cross purposes, will they? Because if you see yields rise and inflation coming back, the Fed's got to at least shift back into neutral. Meanwhile, we're all expecting this incoming Biden administration in cooperation with Janet Yellen to keep showering us with fiscal liquidity, right?
Yeah, so I think what we did see, though, during this past year, and I think we'll even see more of it, is how closely the Treasury and Fed can align their interests, right? What happened in March was really the Treasury found the money, found the equity capital that allowed the Fed to implement all these programs. So there was very close, work between them. That should even improve with Yellen in charge. So I think they can manage it in terms of where does the Treasury issue? Do they issue at the long end? Do they issue at the short end? What does the Fed buy for their balance sheet growth? Do they shift their purchases? So there's a lot that can be done. And if need be, they can even start talking about yield curve control. So there's a lot of things that can be done, that will be done, and the Fed and Treasury will work very closely and monitor this so that we don't get into a situation where it spooks markets.
What do you expect then from the Fed in terms of forward guidance? I mean, the last I heard, no change going out to 2024. That's got to be out the window now, right?
I think we really need to see that inflation. We need to see DC actually come together, deliver some of the stimulus that should, prepare us for that inflation. So no change in the near term. Maybe we see something later this year in that respect. But first, we actually need to get that stimulus going. And I would say the past 2 weeks are making me a little bit nervous. My consensus view is that we will get some good stimulus next year that's job creating. That's what we need to really get that inflation. We'll get some infrastructure spending. We may see some public-private partnerships. We could see an infrastructure bank. But when you watch DC struggle for the past 2 weeks to get the latest round of stimulus done, I'm a little bit cautious that I'm being too optimistic that DC can get its act together.
All right, we're going to talk about that for sure, because there appears to be some pretty fascinating infighting going on in the GOP right now in terms of stimulus. Peter Cheer from Academy Securities sticking with us. When we come back, we will talk about Senate Majority Leader Mitch McConnell first dashing hopes for those $2,000 stimulus payments. Now Lindsey Graham has come out and urged McConnell to find a way to make it happen. Of course, we know that President Trump has said not doing it ASAP would be a death wish for Republicans. This is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The Senate is not going to split apart the three issues that President Trump linked together just because Democrats are afraid to address two of them. The Senate's not going to be bullied into rushing out more borrowed money into the hands of Democrat rich friends who don't need the help.
Senate Majority Leader Mitch McConnell there, dashing hopes for those $2,000 stimulus payments, tying the Democratic proposal to less enticing measures instead as the coronavirus continues surging across the U.S. State and local leaders growing increasingly concerned over the fate of the next few weeks with a new, more contagious strain making its way through the country.
Hope is indeed on the horizon. Light is at the end of the tunnel, but mind you, soberly, we're still in the tunnel, and the next number of weeks will be challenging, in particular, as it relates to this surge on top of a surge. I would argue on top, again, of a likely additional surge coming from Christmas.
For more, let's bring in Bloomberg's chief Washington correspondent, Kevin Cirilli. And Kevin, you know, these $2,000 checks did seem as good as dead. We just recently heard from Senator Lindsey Graham, who is, of course, very close with President Trump, urging Mitch McConnell to find a way to get the vote out there on the checks alone. Is it going to happen?
No. Look, the clock is and the window for this vote is simply closing rapidly. And the first priority from Senate Majority Leader Mitch McConnell's perspective is to make sure that there is a vote before the congressional changeover with regards to the Defense Authorization Act. And this would be the first time that Congress overrides a presidential veto in the Trump administration. Look, secondly, and I would make this point quickly, Senator Lindsey Graham now is speaking out quite forcefully and taking a position as we start the beginning line of a midterm and 2024 cycle. And his position is that there should be an independent vote on the $2,000 stimulus checks. I would note that another position that has been taken recently is from Senator Josh Hawley, whose name is also frequently mentioned in terms of 2024 presidential candidates. And the Republican from Missouri is saying that he also feels that there should be $2,000 stimulus checks. This is a dividing line, so to speak, from conservatives who are emerging as potential presidential candidates like Senator Ted Cruz, who are a bit more apprehensive about deploying $2,000 stimulus checks because of the $27 trillion national debt. Put simply, top line view, the chances of there being a standalone $2,000 stimulus check vote in the Senate remain low. This is purely a matter of politics as of now, and it has not moved over into the policy sphere that would raise its chances.
Kevin, unrelated, I got to ask, I've been reading so much about the sloth of the vaccine rollout in the U.S. and the failure to keep vaccines at the correct temperature when they're going to such wealthy and important states as Texas. Is there going to be any blowback to missing the 20 million vaccinated target by so much?
Well, first things first, in terms of the data, as has been compiled by medical experts as well as medical regulators, they have put out the data that says that more than 2 million vaccines have already been administered throughout the United States. 2.13 million vaccines have already been administered in the United States. That's about half of the global total of more than 4 million vaccines worldwide. In terms of the politics of the criticism and the political sphere, in terms of the rollout of the vaccines, you just mentioned, President-elect Joe Biden has said he wants to vaccinate 100 million individuals in the first 100 days of his presidency. Republicans are arguing that the ability to get the vaccine deployed by the end of this year was in large part due to Operation Warp Speed. So, look, I think as of now, in terms of, again, a policy, the vaccines are only being administered to frontline workers as well as to high-risk individuals with the help of the government. But until it occurs that the private sector is able to deploy the vaccinations without the assistance of the government, then right now, the folks are going to be limited in terms of their access. But every expert since the start of this pandemic has suggested that it won't be until the spring of 2021 when more vaccines for more individuals are readily available.
All right, I just get, you know, if the Lone Star State can't do it, I don't know who can. It really worries me if Texas can't figure it out. Kevin Cirilli, thanks very much for joining us, our chief political reporter out of Washington, D.C. Let's get back over to Peter Cheer, still with us, paying close attention to what's going on in D.C., warning investors about the importance of the runoffs down in Georgia, writing, quote, "They have the potential to shape government policy for the next 2 years." Of course, that is, it's fair to say that's an understatement, Peter. What do you expect from this, from these runoff results?
I'm very confused right now by some of the stances the Republicans are taking about the $2,000 stimulus. I guess they must believe that that's going to help them in Georgia. If the Republicans come through, I think we will see more restrained stimulus. I think we'll see a little bit more targeted. We'll see a bigger effort to use public-private. I think if the Democrats win and then sweep effectively, Congress and the presidency, we'll see a much more aggressive stimulus, a lot more green energy, sustainability built into it. I'm not sure there'll be as much public-private initiatives, and I think we'll probably get less bang for the buck. So my preference, I think, would be to see a mixed Senate and Congress and go from there. But we'll see on January 6th, I think we'll wake up and we'll know what to expect much better. And having said all that, it's still hard to figure out why we have so much difficulty getting from point A to point B on stimulus. Listen, they told people they could not operate their businesses. It feels that we're supposed to get that money to people who've been told their businesses or places of employment can't be open. And yet it seems incredibly difficult. And that really does concern me about what next year is going to look like when so many analysts like myself do expect stimulus and good news out of DC.
Are you saying you're disappointed by the job politicians in Washington are doing? Don't keep yourself up at night worrying about what's going wrong in Washington. I would say use the time instead to write 2 playbooks, right? Depending on, it's almost a binary outcome, these Georgia runoffs, right, Peter? Do you want to get 2 playbooks ready for January 6th and, push your investment button on one or the other depending on the outcome?
I do, and I think that's going to be critical. And I think what concerns me, or people need to be thinking about, if the Democrats do win, I would expect more stimulus. But then the question becomes, who do they make pay for this? And that's where I worry, whether corporate taxes or other things that'll hurt the market, and gets back to what we were talking about earlier, where there's a potential that the underlying economy can perform better than markets. And a lot of that's going to come out of what exactly DC does this year. And I think that's more likely to occur with a Democratic sweep than if we keep the Republicans in the Senate.
What do you think about a rotation? This is kind of a separate issue from what you're waiting for out of Georgia. The rotation to value, we've already seen it kind of start, and then rotation out of the U.S., which is very highly valued, certainly in terms of equity PEs, into places like Europe, which aren't nearly as high.
I see both of those rotations continuing. I think value is going to do very well. Having said that, I do think we're going to see these, spasmodic fits where everyone rushes into one pool of money that's being driven a lot by the options that are out there. This weekly options trading has really made those rotations much more powerful. I like getting out of the U.S. to some degree. I want to be in Europe, emerging markets. Part of our thesis is that these negative real yields that we're getting are going to continue as inflation starts to manifest itself and the Fed and Treasury work to suppress interest rates. It's turning into a weaker dollar. So this weaker dollar phenomena is structural in nature. So foreign investors, I think, are seeing their returns diminished by this weaker dollar. I expect that to continue for a period of time, which incentivizes people to get out of U.S. assets and into foreign assets to appreciate, get some of that currency benefit.
All right, Peter, it's been great having you on the program today. Thanks so much for joining us. Peter Cheer there from Academy Securities. We wish you a safe and happy new year. Coming up, the analyst action you need to know about now. That's next in our morning calls. And then later, big, gigantic, absolutely huge tech and the electric vehicle boom fueling another big year for stocks. That conversation is still ahead with Will Ryan of Granite Shares. This is Bloomberg.